Hello traders, Gary Wagner here. It is 12:05 in Honolulu, 6:05 in New York on Thursday, 3rd day of April 2025, and this is the evening report for gold and silver. Profit taking and liquidation drive gold sharply lower amid global market declines. Gold prices plummeted in a dramatic 36-hour sell-off characterized by exceptional volatility and price swings. Dollar weakness partially cushioned both gold and silver's price decline. The U.S. dollar index fell by 1.63%, with the index currently fixed at 101.65. Substantial declines in U.S. equities prompted gold traders to liquidate long gold positions to generate liquidity needed to cover losses as well as meet margin calls, accelerating the metal's downward movement despite underlying supportive fundamentals. The dramatic drop in both gold and silver followed President Trump's announcement of expanded import tariffs during a Rose Garden address yesterday. After hitting the new all-time record high, $3,201.60 yesterday, gold opened today's session at $3,196.60 and through the session declined by about $123 to a low of $3,073.50 before recovering, but with substantial damage, down $52.20. That's a net decline of 1.64%, taking the most active June contract to $3,138.10. Gold is now trading overseas, up 60 cents from New York's close at $3,138.80. Unfortunately, the strong decline today resulted in our current trade's protective stop being hit. We went long June gold at $3,157 with a tight stop $15 below that at $3,142. That stop was hit as the market sold off, resulting in a loss of $15 per troy ounce or $1,500 per COMEX contract. While we acknowledge and realize that fundamentals absolutely guide and determine price movement over time in gold as well as other commodities, our technical model, which does have a foundation in Elliott Wave, would look for a return to the upside bullish market sentiment that was prevalent, because I believe that this current leg of the rally, what we are labeling as a primary third wave, has not concluded and should not conclude till a minimum of about $3,250. Technical support should come in above $3,100 per ounce. I would peg it at about $3,120. That is far above today's low, but below today's closing price should further selling pressure continue to drive gold prices lower. For right now, we will determine where support comes in, whether or not we will see gold return to the overall bullish market sentiment, which I believe it will. Unquestionably, as gold has been moving higher, a portion of that price ascent has been directly attributed to dollar weakness, which was trading as high as just above 110 back at the beginning of the year, around the second week of January. The fall, though, has resulted in a correction that exceeds 78%. The first technical level of support we can find does not come in till 101.80. However, there is not much strength in terms of this technical top that we are looking at that occurred in September. A break below 100 would be devastating for the dollar, because that would take us into a territory that the dollar has not really seen since April of 2022. We can see critical bottoms here as well as here where we started our Fibonacci retracement data set from, and a break below this price point doesn't really have any technical support till about 99 as well as 97 on the dollar index. Traders, silver was hit tremendously hard. We will cover silver in detail on our weekend review with our technician Joseph, who typically covers silver, but silver declined by over $2 today, a drop of about 6%, with the next level of technical support coming in between 31.56 and the current low that came in, which is just below $32 per ounce. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.